Hello, everyone, and welcome to another edition of the Forex Market Update. Okay, we're looking at the euro versus US dollar on the daily chart. And in my last update, I spoke about the critical area around 133 by this drawn by this red line, this red horizontal line here. The market last week did close below this 133 swing low, and we are definitely in a bearish mode on the euro versus the US dollar. Now, where will this decline end? We can take a look at our monthly pivot points, and we see that the market is close to the monthly S2 pivot point. So we will be keeping an eye out on that level, and the level is 131.51. We could see some support come in the market at 131.51. Okay, so for now the momentum of the euro is currently to the downside. Now at 131.50 or so, we could get a retracement. So we have to keep an eye out for that. But for now, the market is down, and the trend has reversed to the downside. So we're in more bearish territory. Taking a look at the Canadian dollar, we see that the market is found support at the 106 level and is trading just above the 109.52 level, and we see that this area just below 110 is acting as resistance. So the market is at resistance at 109. Let me just check the exact. 109.86 is resistance, and support for now is at 108.53 and 108.34. So those are support levels on the Canadian dollar versus the US dollar. Now another interesting chart is the Japanese yen. We see that the market was in a pretty long consolidation pattern that we can see here. This is a triangle. The market went into a triangle, and you can see that the price action became smaller and smaller and smaller. And then what happened last week was the market broke out significantly out of the triangle, and it's even more apparent on the weekly time frame. You can see that the market broke above the triangle significantly last week and closed at a new high. So we could see further gains in the US dollar, Japanese yen in the days to come. And folks asked, what was the clues that the market wasn't going down? Okay, as you can see here, the market found support at the 101 level. Let me draw it with a horizontal line. The market came down to 101 in February, also in mid-May, and in the middle of July, the market failed to break the 101 level. And these areas of support can act as significant turning points in the market. And ever since the market rejected this 101 level, the market took out this swing high and broke out of the triangle. So we could see further gains in the Japanese yen. An obstacle that the market is currently facing is this high here at 104, 104.14 or so. You would want to see the market close above 104.14 for the bulls in this market to get more excited. But as we can see now, This is being recorded on Monday morning. The market is finding some resistance at this 104 level, so we just have to keep an eye out on that. Taking a look at the broader US dollar index, resistance, as I spoke about previously, was at 81, just below 81.50, and the market last week, let me just take a look at the weekly chart. You can see that the market convincingly closed above this 81.50 level. So the market could be in for further gains. Now, there's significant resistance in the US dollar index up at the 84 level. 84 up to a high of 84.75. So this entire region here could act as significant resistance in this market. So we have to keep an eye out on this level. But for now, the dollar is in bullish mode, and I'm not saying you must just go out and buy the dollar now, but the momentum in this market is to the upside, and a lot of trend following programs will kick in now and buy the US dollar, because certain resistance levels and support levels, depending on the currency, has been broken. Okay, taking a look at gold, we see that the market is currently in a triangular consolidation pattern, and this market has really done nothing over the last year or so. Actually, since August, we're in August now. So since August of 2013, you see that the market was just maybe about 1400, and now it's at 1280. So the market has been in a very tight range, and I just get the feeling when this market does break certain levels, we could see a significant price move. And those levels are 1200, because we have significant support at 1200 here. Market closes below 1200, that could signify that further declines will be in store in the gold market. And if the market does close above 1400, the market does close above this $1,400 level, we could see further gains in this market. So those are the two important levels that I would be looking at in the gold market. Okay, moving on to the stock market. So I do get a lot of questions about stocks. Let's just look at S&P 500. We see last week the market closed just below the all-time high in the contract. So this market is still in a broad uptrend, and it has been in an uptrend for the last 2 years or so. So it doesn't really make sense to fight this trend now. And a lot of folks have been complaining that the currency market has been fairly stagnant. And this is one of the reasons why you have to diversify your portfolio across different asset classes, because some easy money has been made in the stock market over the last 2 years. So taking a look at the currency markets, just remember that the momentum has now shifted to the downside, and the US dollar is in control. Looking at the broader weekly chart, this is what could be happening in the markets, and this is not for sure. We had a head and shoulders reversal here. This is the head, this is the right shoulder here, this is the left shoulder. So this is the head here. The market broke above the neckline at 136. So what could be happening is that sometimes when you do have a head and shoulders pattern, the market then retraces to either the 618 retracement level or the 786 retracement level. So, I mean, this is not confirmed yet, but this is what could be happening in the markets on the weekly time frame. So we'll just have to look out for evidence of that, but that's what could be happening for the weekly time frame. Anyway, I hope you enjoyed this currency update, and just remember that when you're trading, it is essential that you, one, learn how to read charts properly, because chart reading is at the core of your decisions to either buy or sell, and two, manage your losses appropriately. Those are the two things that are very important when you're trading. Make good decisions on the charts, your buy and sell decision, and limit your losses. It's not acceptable to have 10% losses per trade, 15% losses per trade. And when I mean 15%, I mean of your account. So if your account is $10,000 and on a single trade, you're risking $1,500 or even $1,000, that's a 15% or a 10% risk per trade. That is the easiest way to get to lose your account. So keep your risk small. I would recommend 1.5 to 2%, because if you are having a down period and you keep your risk small, when the markets do start to favor you again, you are in striking range to really make a profit. Anyway, this is Beyond. I hope you enjoyed this update and have a good trading